Hello, I'm Asif Farouk of Finextra and I'm here today with Fiona Hamilton of Volante Technologies. So Fiona, thank you for joining me. How would you describe the environment of the payments market today?
I've been working in wholesale financial technology for nearly 30 years, and actually a lot of that has been within the payments industry, and I think it's safe to say that for a large percentage of that time the payments industry has been somewhat of a bit of a backwater. You know, there hasn't been a lot of change, and suddenly within the space of a few years, I think really the trigger being the implementation of SEPA, suddenly within a few years it's actually probably the most changing area of financial technology. There's been so much regulation, so many changes, pressures in relation to onboarding, so corporates making more demands in increased cash management, more depth of cash management, consolidating their treasury operations, which has led the banks to have to bring better services, other channels to those corporates to try and gain their business, whilst at the same time there's been a lot of change in terms of settlement mechanisms and clearing systems moving to new message standards and technology. So there's just change absolutely everywhere, and the payments industry as it stands really hasn't been used to that level of change. So I think the struggles within that industry are actually they're having to deal with so many changes that they just haven't been used to it in the past.
Okay. What issues then are banks and corporates facing?
Well, I think it kind of leads on from that kind of inertia, in that the vast majority of the processing systems, certainly on the bank side, have been around typically for many, many years, and a lot of the vendors that provide systems to the payments industry have been used to, you know, a certain pace of life. And I think the big challenges now are that is no longer a workable solution. So people are having to implement different connectivity options much more rapidly. So, you know, their corporates are saying, well, where's your Ripple Pay support? Where's your currency support? So all these alternative payment channels, while saying, yes, and I want real-time payments, and I want this. So those infrastructures are generally struggling to keep up with that amount of change. So they're having to go back in-house to try and change those systems, which were sometimes written decades ago. And the problem is, the people that wrote those systems are no longer around. The vendors who are trying to supply into that market have been used to building applications which don't lend themselves to rapid evolution. So the challenges are all about having the agility to not take a year to provide a customer or to adopt a new channel. And I think that really sums it up, is they're struggling with the agility to do things quickly. And I think if you look at the implementation of a payment system today, it's like the typical iceberg. So 5% of it is implementing the payment system or the payments hub or engine, whichever term you want. But 90% of the challenge is actually doing the integration to upstream systems, sanctions, AML, funds checking, foreign exchange, and also the downstream connectivity to clearing systems, to real-time gross settlement systems.
Okay, what should the banks be looking to do? What key areas should they be focusing on?
Well, I think what they should be looking at is actually insulating those systems. So rather than going back and trying to put all of that functionality into core systems, is actually recognise that actually this is the new world, it's the new paradigm. They're going to have to manage this change going forward. So therefore, put an insulating layer around those core systems which lends itself to doing things in weeks, not months, or months instead of years. Because typically, you know, it can take, you know, 6 months, 12 months in the traditional channels to adopt a new payment market infrastructure. When that really, it's not so much about the time to do it, there's also the cost of the lack of revenue. So if you want to onboard a new customer, if you have to wait 6 months or a year to do it, that's 6 months or a year where you're not getting their revenue. So it's not just about the time and the cost to do it, it's about the latency to onboard that revenue.